the admission setup. So yeah.
And yeah, so please, let us know if anybody enters and interrupt to do any intros.
Definitely.
That's fine. Okay. Since we do have a lot to cover. Hello, everyone. How are you doing? Everybody there? You can either raise your hand or say something in the chat or go on just turn your mic on for a second just so we know you're all there.
We're here.
Okay. Good. All right. So this is the last of a 4-part series. So we're going to talk about the money part of the business. A lot about the record keeping, because you do need to do analysis of your financial records and then make decisions from that. But as before, let's just do a quick round robin and have everybody introduce themselves, type of business, years in business. I think we have some new people who weren't with us maybe earlier this week. So Baldwin, who do you think we should start off with if you want to coordinate that? Because it's hard for me to see the attendees.
We have Mel Chase. We could hear from Mel.
Hi, I'm just starting, still in the planning stage. So
Okay.
I'm planning to sell bags or jewelries. So
Wonderful. Okay.
Ms. James, did you want to join us?
Sure. Yeah, there's a lot of noise in the background of my house, so I put it on mute all the time and I have to take it off.
Understood.
Yeah. So hi, Deidre James, and as I was mentioned earlier sessions, kind of thinking about a food business, like a prepared meal business.
Nice. I know Michelle had explained that she also has some background noise. Michelle, did you want to type in the chat the type of business that you're looking to start or that you're operating?
I think she's the trucking, right?
Yes.
Yeah. Okay. Perfect. Wonderful. All right. So as new people join, just let them know they can put their name and business info in the chat as well, so we can make sure we support all small and local businesses. Very important we do that. Just go through here of some of the elements we're going to cover today, and I'm not in the slideshow setting right at the moment because I have to switch out to go to some Excel documents. So I'm just going to click through it like this for right now, just to make it easier, because the Zoom and other platforms don't like you when you're switching between different software applications. I don't know why none of them seem to like it, but anyway. So we're going to talk about profitable business, because that is the end goal. Not that money is the source of everything, but it is important because without profits, the business cannot continue. So we want to build on whatever success you've had so far. So we're going to cover the financial statements. I'll tie that to the business model. We'll talk a little bit about brand and branding. That in itself can be an extensive course, but I want you to think about it when you look at your financials to see, okay, where do I need to tighten up in the branding, or where do I need to tighten up in the user experience? And of course, there'd always be a reminder to write things down. So top reasons to manage money and yourself. Besides, again, sorry for the typo there. I have a very bad habit of doing last minute changes. And I just reworked this whole thing in the last 15 minutes. So I'll go back and correct that. But it's just good business. Number one, your financial reports and records are the basic requirements to be in business. You'll need it for your business registration compliance, you have to file your business reports and your taxes. If you're going to pursue certification, they're going to want to see copies of your financial records. If you're going to need access to capital, any kind of loan or funding, even grants, Sometimes there are grants for small businesses. They're going to want to see financial data. And also customers, you'll need to have your financial data handy, because if you're doing interaction with customers and they request a refund, they request a report, you want to give them, depending on the type of business, you provide a report of all of what they spent with you. You need to have that information handy, which is why you should be, all of this information we're talking about should be in some sort of accounting software. And there are numerous options out there. And we'll be putting together a list of some of the top ones that you can look into. So don't ever feel like you won't be able to find one, because there are a plethora of those that are tailored to small businesses in their reporting requirements. Besides just meeting the basic requirements and compliance issues for being in business, to know your numbers is the core of knowing your business. So number one, as I explain to people a lot of times, is that cash is king. That has never changed. It's the lifeblood of the business, because you have to buy goods and services yourself in order to make products and services and experiences for your customers. You need cash to pay for advertising, promotion, to attract the customers, and you need cash for all the systems that are going to support that, including the payment collection systems. Cash is king, but data is the queen. Data tells what to do. So that's the key. So the financial reports not only reflect the money, but they are a source of data that you can analyze and make good decisions for your business, which is the third reason to manage the money in yourself. Because as the business owner, yeah, you can call yourself the chief executive officer, but you're really the chief manager. You're the one that's going to be making all the decisions, and that's the bulk of your work, is making good decisions. And it's a continuous process. And so no decision you make is going to be final, because as the external environment changes or the internal environment changes, you will need to make those adjustments. And we talked about internal and external last time. So the core of it is that you need data to make those decisions, and you need data about the money to make good decisions. All right. So this is a slide that's been in the last 3 sessions, I think. So just a little recap of what is the business. It's an operation that provides a product and or service with an experience for the customer. And in turn, that customer pays, and the business will collect in a timely and efficient manner. But for tonight's purposes, I've made an addition to this kind of process. So yes, you're still in operation. You provide the products, services, and experience to a customer, and you collect payment. But I've indicated that all through the cycle, there's going to be an input of money for the operation to make the product and services, to provide the experience, to attract the customers that's going to pay for that experience. And the money that you put into the business at the end of the day has to be less than all of the money you collect. So your goal is to manage the business in such a way the amount you're spending on the business is far less than the amount you collect from the sales and revenue of the business. I'm open up to the floor. Does that make sense to everybody?
Yeah, if you're not getting out as much as you put in.
Okay.
Yeah.
All right. I just want to make that
that's a problem.
Yeah, because there's a lot of textbooks, there's a lot of authors on this kind of stuff, and they go in some complicated way of doing it. And I try to simplify of how you need to think of your business. So you're the person in the middle that makes all the decisions to make this happen. And so with that, what you need to do with your business as you're trying to grow it, to continue to grow it, you have to review your financial statements on a regular basis, at least monthly. You're going to have a quarterly review, and you have a yearly review. You're not only going to analyze the statements, but also the financial ratios, the calculations that you can do as a result of the information on those statements. And so we're going to go through the 3 basic statements, and I'm going to highlight some ratios, but there are a lot of them. But the ones you need to look at are dictated by your industry. Some ratios are more important than others. depending on your industry. If you're a retail store, it's a little different from a trucking company. A retail store is very much going to be concerned about the inventory and how fast is the inventory moving versus, say, a trucking business, because you don't have the same sort of product and service. The next thing you need to do, you need to review business model, and you need to review your sales and marketing calculations. So there are not only some calculations that are strictly related to the finances, there are some other calculations that are related to marketing. Because what you want to know is that the money you're spent on sales and marketing, excuse me, are actually getting you the return you need back to the business. You need to review your brand and branding and your user experience. And I put this here in the financial section. Most people put this in the marketing section. And we covered that some basics of it in the sales, marketing, and customer retention funnel. But I put it here because the whole purpose of the brand and the branding is to connect with your customers so you can have sales. The whole purpose of the user experience that you want to design for your customers, it's so that they have a better instead of just getting the end product or the end service, it's just that the whole, the phases that they go through from finding your product, deciding on whether it fits their needs, purchasing the product, using their product is all very pleasant, engaging, and fits your brand. And in turn, allows them to make the decision to say, you know what, this is the company I want to keep buying from. So that's why I put it here. And then lastly, you need to make decisions, make the adjustments as needed. Sometimes it's very, very difficult if you're a small business owner, particularly, if you've had some level of success with your company or in your career, you don't want to change for whatever reason, maybe fear, maybe hesitation for other reasons. But if the data shows you have to change, then you need to make the necessary adjustments. Okay. So let's go through the financial statements. And like I said, there are 3 basic statements. There are some more sophisticated variations of these 3 based upon your industry and how large your business is, particularly if you're getting over like the $1 million+ threshold or have a significant number of employees, then things get really complicated and complex in your statements. And for most of you, I don't think you're there yet, but you're going to get there. But this is the basic information you will need, and you'll build upon it as your business grows. So number 1 is the cash flow statement, which records all sources of cash coming into the business, as well as all sources of cash paid out of the business. And you might have to have a cash flow projection, meaning it's your best guess of what the inflow and outflow will be over the next couple of years, particularly if you're going for bank funding. They like to ask the cash flow projections of the sometimes up to 3 years. This is why your business plan is so critically important, because as these financial statements are just it's going to be the quantitative information that meets the narrative that you've written in your plan. The other statement is the profit and loss, also referred to as the income statement. And here you're going to record the sales revenue, the cost of goods, the gross profit, operating expenses, and net profit. The key to this statement that no matter how complex your business may be, you want to know your cost of goods and you want to know your net profit. Because it doesn't matter what your sales totals are or what your gross profit is. If you want to know what are you taking home at the end of the day, which is the net profit. And then lastly, the balance sheet. So the balance sheet tells you just how much your business is worth. Is assets minus liabilities equals owner's equity, which is basically net worth. And so your assets are all the things that are of value owned by the business, and your liabilities are all the debt that the company has. And many times you go into debt to acquire assets, but you need the assets to make the products and services to provide the experience. So that's why it's called a balance sheet, because you look at them side by side, and each side should balance out to the other. So assets should equal your liabilities and owner equity, which is really important about how your record keeping processes are intact, which goes back to our initial session of getting organized, because when you put the data into your accounting system, it will generate these statements for you. But you got to put in the good data, and you got to put in the data on a timely basis so that you're able to generate these reports regularly. Okay. So we're going to cover a number of documents today. And so I put the templates in a external folder that you all can download. The link is in the chat. It's probably early up in the chat. So please feel free to scroll up a little bit in the chat box. And you can click on it. It takes you to a folder where the templates that we're going to cover are located. So I'm going to switch to those templates right now. Feel free if anyone has any questions while I switch gears here. Okay. And everybody see? Can everybody see my screen now?
Yes.
Okay, perfect, perfect. So I generally like to start with the cash flow and cash flow projection. So that it's the same when it's a cash flow statement, it's reflecting that particular month or year or quarter. If it's a projecting, then you kind of it's projecting out into the future. So I like to use the cash flow statement first. And all of these templates that I've posted are free. They're Microsoft templates. So there are other variations of this. So you can peruse and take a look of it as you will. But so I like to start with the cash flow statement. It's just my preference. There's no good rule to it. Everybody has their take on how they look at documents. But for me, it tends to be the easiest one you can grasp. You might have a different style as you've been running your business as to what you want to look at first. But for the cash flow, the first segment of the document, let's say right here, as you can see where my cursor is circling, it's going to record all sources of cash coming into the business. And I say all sources of cash. So you're going to record your sales, but you're also going to record if you got loans, if you put money in from your own savings, if you put money in from friends and family, any source of money coming into the business, you're going to record appropriately. Just know you can always edit the categories. So if you don't have returns or allowances at the moment, or it's just not the type of business you have, you don't have a loan, you can modify it or just leave it blank. So don't think you have to be obligated to use the templates and their predetermined labels that they've included. Okay, but you for sure want to include your sales. If you did have loans, if you did have other income from interest, meaning that you have investments or the business has investments and they collected some returns, maybe you own some stocks, maybe you had some bonds and you cashed it in, you put it back into the business, whatever the case might be. So you will indicate which ones you have, and then for each month, you just record when that cash is coming in, right? And that's what makes this so great, because not every month you will have the same categories of cash coming into the business. So that's what the beauty of this allows you to see. When is money coming into the business, or when did it come into the business, and what category of cash that came into the business. The second half of the template is far longer, and it's all the money that you paid out. And when I say you, I mean the business. So it's all of the expense categories just listed out. And you can tell, you can imagine this is going to vary, of course, by the type of business you have. And if you've been in business a long time, you should have about 3 to 5 years of financial statements at the ready. So if you're doing this as a projection, you should have data that you can look back on and kind of get an idea of what it should be moving forward. So of course, there's going to be some things that every business should probably have, and that's, let's say advertising. You're going to have insurance. We talked about it in the Get Organized session, which is session 1. You have materials and supplies. You're going to have, you might have some office expenses. You might rent or lease a facility. Even if you have a virtual office or you just have a mailbox, all of that goes here. And at the end of the statement, what's going to happen is the Excel spreadsheet is going to automatically populate and deduct what went into the business and subtract what went out of the business. And that's going to give you cash on hand at the end of the month. So if you could imagine, if you have a 12-month, 6 months laid out, you can see how your business is doing in very broad terms, all on one sheet. You know what's coming in, when it's coming in, you know what's going out, and when does it need to go out. And this allows you to do budgeting and managing the day-to-day funds you need to keep the business afloat. All right. Any questions there? Any thoughts? Oh, a few more people joined.
I have a quick question. And
Sure.
so I did see the link. I haven't had a chance to open up the sheets yet, but are you saying looks like, are the ratio cells populated with the formula? So do they automatically,
Yes.
when you put numbers in, they automatically generate those ratios?
Yes.
Okay, great.
Yeah, that's why I chose them. There are some ones that don't have some of the calculations, but I chose ones that I thought would be the most useful. Also, depending on what software you have, your software may also generate that information for you. So you may not need to use it on a separate spreadsheet. But I know you're in the startup phase, so yes, you can use this one.
Okay, great.
All right. So let's go on to income statement. I just switched screens. Can everybody see profit and loss statement at the top?
It's still on the cash flow.
Yeah, that's what I figured. Okay, here we go. This is the part of Zoom and Teams and GoToMeeting I absolutely hate. So there you go. We're on statement number 2. Do everybody see profit and loss?
Yep.
Okay. All right. So the profit and loss statement tends to be a little trickier. So I did some pre-filling of some information using our fictitious company from session 2, City Soul Catering, just to give us some example of what it would look like. I did some highlights that you might not see in the template because I just want to point out certain things. All right. Some of the financial ratios for the profit and loss statements have been identified, but they're far more financial ratios than just this, and I have a list for you. But say for this example, I'm using City Soul Catering. I'm using the current period as 2020, the last plan. In this template, you can insert previous year data. And I said last year was 2019. It also allows you to insert a budget, so meaning what you thought it would be for that year. And then it did some automatic calculations. So all these 3 columns here automatically start to calculate as you input information. Okay. Again, if being in business for a while, whatever software you're using, it might also be generating this for you. So, and if you don't have that option in your software, you may want to consider maybe upgrading your subscription, depending what software you use, so you can get this additional type of analysis if needed. Okay, so the key to remember about profit and loss, it too is divided into 3 major sections. The first section being the sales revenue. So you're always going to list the money coming into the business, but only from sales, not the loan, not the money you put in for your savings, not the other types of money that might come in, as you did indicate on the cash flow statement. So this is what starts to separate this one from the cash flow statement. So with this version, it allows you to identify your main products and services. So I said for the catering company, traditionally we would have done events, and then this year, because of COVID impact, we transitioned to offering meal kits and did some consultations. And so those are our 3 main product lines. So I inputted, and these are in the thousands. So last year we did about 60,000 in events, and 2019, I'm sorry, we did 60,000, and then for 2020, because we didn't know the pandemic was going to hit, we decided, we're going to have an increase because I'm going to do more marketing, whatever the case may be. We'll have an increase of 75, and then 2020, our actual, we only did about 5,000 because, as you can imagine, the pandemic hit in late winter, early spring. That dramatically, the shutdown dramatically changed the activities, particularly outdoor activities, which people like to get catering for. A lot of major events were canceled because you couldn't have large gatherings of people. So that was weddings and parties and etc. So you can see it's understandable that you would have this drop, right? And we could see how the calculations revealed that there was significant change, 90%, in the what was expected in just this category. If you go on to the other products and services, you see here that for the meal kits, we had 45,000, and then other consultation was 20,000. So these the meal kit went up because maybe that was something I was just doing on the side in 2019, just a little thing people, friends and family might ask to do. But then it became a main source as I had to pivot and transition in response to the pandemic. So you, at the end of the sales portion of the income statement, you're going to get a total. So here we made $70,000 in just sales. The second portion of the income statement is cost of goods or cost of sales, whichever terminology you want to use. And here, the critical part about this is you're only going to provide the expenses associated with making or providing the product and service. So unlike the cash flow statement, where you're listing all of the expenses in an extensive list, the profit and loss statement, you're only going to show in the cost of goods those expenses directly related to the product. So here's the critical part of this. This goes right back to our get organized session. You have to know your business. You have to know what expenses you incur when you have an actual order, or when you have a customer actually paying for a product, because there are some expenses you have to pay regardless if there is a customer. And so those expenses are called operating expenses, meaning you pay them regardless of what your level of sales. That might be the rent, that might be the utilities, you might have advertising before you have any sales, etc. But cost of goods, you want to separate that out. Why? The most important information that your cost of goods is going to give you it's going to tell you what percentage of the sales revenue you actually have to use to just pay for the product. So in the case of this business, we have here 38.6%. That means out of all of the revenue that was generated, almost 40% of that revenue went back to just to take care of the product, the product and services. That's a very high margin. It's too high. You almost won't survive with that. In the food service, you want to be closer to the 20%. There's some industry standards you would be looking at. But this is the critical part about the income statement. And this is what gets people on Shark Tank. How many of us watch Shark Tank, or am I the only one who's slightly obsessive about it? Anybody else? So I'm the only one? That's what you're telling me? Okay. All right.
Yeah, it's fine. My show is The Profit with Marcus
Oh,
Lemonis.
yeah, that would be my number one. You are right. You are right. You're correct.
Michelle says she loves that show.
Yeah, so it's and they nail people every time because they don't know their profit margin.
Their numbers.
Yes.
Yep, they don't know their numbers.
This statement is it. This is why, right? Because if your profit margin is so low, that means you're never going to make money. And so there is a range of what is acceptable by industry. And I'm going to give you some resources that could, where you can go to find out what's acceptable for your industry. So the other important thing you're going to find out about your income statement, you then learn what's your gross profit. So if I take my sales, subtract my cost of goods, and my gross profit. So a lot of people say, oh yeah, I made 5 million last year. I'm probably Debbie Downer, because I'm like, is that your sales, your gross profit, or your net profit? Because I don't really care what the sales are. I don't really even care what the gross profit is. Because as you can see, we haven't even gotten to the operating expenses that you need to subtract from the gross profit to know if your company is actually making money. And so the operating expenses, and there, I like how this template kind of categorizes it. So it allows you, and again, you can modify all that. So you have sales and marketing, you have research, you have general administrative costs. And so you would add all that up, and it separates the taxes, but nonetheless, that's something you have to pay. You just kind of pay it differently because your taxes tend to be quarterly and all that good stuff. But we talked about that in the Get Organized section of all the types of taxes you have to be mindful of. But when I subtract gross profit from all of the operating expenses, then you're left with your net profit. This tells you how much money your company actually made. So even though it's similar information as the cash flow statement, it's just organized differently so you get a better idea what amount of money am I spending on just making the products and services. Because I might need to modify how my business model and my value proposition so that I can get the cost down to be profitable. Okay. Any questions there? Any thoughts? Are we all good? Okay. So you can see an example that this company lost money in terms of looking at their income statement. It was not as much as it could have been, but it nonetheless it lost. And this was all very fictitious, so I didn't, sculpt it so it showed a profit or anything. I just wanted to illustrate the point of how important it is to have an income statement and looking at these key data points so you can make decisions. And so if I was running this company, I would look back and say, okay, how can I modify my cost of goods? And then how can I probably redistribute some of my expenses? So particularly in the marketing is not big enough to support the kind of income needed to be profitable. So that would be my key takeaway from this business. All right. All right. Any questions there before we go into the last statement? Are y'all good? Okay. All right. So let's cover the last statement. All right. So the last one is the balance sheet. Again, slightly different perspective in looking at the business. And then the template I chose for the balance sheet already had some financial ratios built in. I added some commentary just so you can see the definition in this particular example. But on the template, it's going to be blank. But don't worry, you'll get a copy of this so you can go through the different definitions. But here's the key thing I want to go over about the balance sheet. It's called balance sheet because the assets has to balance out with the liabilities and owner's equity. There are some templates in which it's listed more of a vertical, so the assets are on top and the liabilities are towards the bottom. I tend to be a traditionalist and prefer the side-by-side view, but it's no rhyme or reason for it. It's just my preference. So you're welcome to structure your software to produce the format that you like. So assets. These are all the items, all the things of value that the business owns. And let me be clear, it's what the business owns, not what you own that you're using for the business, okay? Because if you own it, then you do have to have some documentation that you are transferring the asset from yourself to the business. So that's a whole different conversation, but it goes back to the record keeping. Because as you recall, in our Get Organized section, we talked about taxes, and there was an element of personal property tax, which is the tax on items that the business owns. So where that actual item would show up on your financial records would be on your balance sheet, and the government is going to expect you to pay taxes on that property that the business owns. But assets, two main types of assets. You're going to have your current assets. So you always list the most liquid asset first. So your current assets are those that you can convert to cash, usually within a year. So cash is always listed first because it is the most liquid. And then you'll have investments, your accounts receivables. So that's money that's supposed to be coming into the business that you might have invoiced from your customers, etc. Prepaid. And so these are all things that are going to be converted to cash within the next year. So that's the total current assets here. Then you have fixed assets. So these are long-term assets, meaning, yes, you can convert them to cash, but it would take much longer to do so. And also, they are a critical component of the business for the business to do its work of producing the product and services. For example, if you own property, if you have large equipment, those are fixed assets. You probably don't want to sell them because you need them to make the products and services, okay? And in this particular template did list other assets. So it put the investments and deferred income in the other categories. Sometimes you see it with the fixed, sometimes it's separated out, okay? So the total assets for this business would be $13,000, okay? Remember, this is a 3-year-old company. I think, trying to remember the background. City Soul was a 3-year-old company that made the transition of pivoting as a result of the pandemic. And so this is where it's at in 3 years. It's at $13,000 an asset. On the flip side of the coin, we have what's called the current liability. So liabilities are all the debt. It's all the stuff that the business owes people or other organizations. And of course, this is where you put your loans, most times in the current liabilities, meaning all the areas that can be paid off within 1 year. You put your credit card debt and all that kind of stuff. The accounts payable. So the accounts receivable is money that's owed from the customer. Accounts payable is money that you owe other vendors. And if you can see, if you have a large inventory, your accounts payable might be bigger than some other company that doesn't have any inventory. So the current liabilities for this company is $3,000. And then I just said on the long-term debt, meaning the rest of the debt that would be paid after a year's time. So I'd say we had a credit card of $6,000. We maxed it out because of the pandemic. This year, you're supposed to pay at least $1,000 of it, but the remaining balance is going to be outside the year, and it's $5,000. That's what I was thinking when I put here. And so then it adds up the totals. So you have your total liabilities of $5,000. I'm sorry, total other liabilities of $5,000, total liabilities of $8,000, total owner's equity of $5,000, and then the total liabilities and owner's equity is $13,000, because the two sides have to balance out. What usually happens with most small business owners, and I was guilty of this when I first started, we don't record the total amount of money we put into the business. So the calculation here is making an assumption that we put $5,000 into the business somewhere along the way. And that was either going to be reported in the assets as cash into a bank account or whatever the case may be. Make sure that you are continuously recording the amount you're reinvesting in the business. So that you can make sure your software has the right owner's equity and it's not just filling it in because it has to balance out from each side. Okay? Questions, thoughts? How's everybody doing? Is that a lot?
Can you talk a little bit about how you record plowing? So if you're putting cash into the business, either you're buying an asset like a piece of equipment, or you're buying more food. Since this is a food preparation business,
right?
Do you record that as like more of a shareholder loan, or do you bump up the equity in order to balance the asset?
That's a great question. That would be a decision the owner, manager of the business needs to make. Are you putting money into the business as a loan? If so, you need to document it as a loan. If you're putting it into the business because you're the primary equity holder or the sole equity holder, and you're self-funding the startup of the business or the operations of the business, let's say you're city sole and you're 3 years in and you're still putting money in, then you're putting in as part of equity. In your accounting software, it allows you to make that kind of labeling. So if it ends up being a debt, it will record it in a debt. If it's equity injection, infusion of cash from the owner, it will record it as such. And that way your balance sheet that it generates will have the appropriate category. But great question.
Okay, thanks.
Yeah, so that goes back to the decision making you have to make, because if it's a loan, what are the terms? When is the business expected to pay it back? Do you have it documented, et cetera, et cetera?
Let's have a quick follow-up question.
Sure.
I would imagine this has an impact if you're seeking external funding, that this would have an impact on that and on your decision making.
Yes, yeah. So, some would say, oh, the company has a debt on it and the debt is to the owner. Some might look at that and be like, that's weird. Others might say, you know what, I want to know how much you put into this business, particularly banks. Here's the thing, trick. When I used to work with a lot of banks, they rarely fund 100% of any project. They like to fund 80% because they want to know that you're invested. If you think it's such a great idea, then you should have documentation of you put your own money towards the business or the project. So I tend to lean towards showing it as an infusion as based upon the owner's equity, because that shows you have great faith that you're going to operate the business in such a way that it is going to continue to grow, and that you will get your owners withdraw, because the owners can withdraw, but you'll build up such net worth that the business will be worth what it says on the books in the long run. Yeah. But that's a great question.
Got it. Thanks.
Yeah. Anybody else there? Great questions. Somebody's been watching Shark Tank. I know that's what's up.
The Prophet.
Oh, yeah, that's right. The Prophet. You're right. He takes a different. He's the people process product. That's his thing. Yeah, but he's deep into the know the numbers too. Yeah. Okay. Well, let's go back to the PowerPoint. Oops. We still have a lot to cover, and right now we're right on time. So let me go back.
Mr. Tony had joined us also, and Miss Ella from one of our previous sessions had also joined us back.
Oh, great. But do you care to introduce yourself? So please put let us know who you are, your type of business, how long you've been in business. Yes, no, we don't feel like sharing today.
I thought there were two of us. So I was like, well,
Oh, okay.
talk first. I didn't want to, cut her off if she was going to talk first. So I'm Ella O'Brien, president and founder of AV Global, or Smart Home and Business Automation Systems, servicing specializing in aging-in-place technology solutions, audiovisual, electronic setups for people moving into new spaces.
Very nice.
I'm glad to be back.
Yes, we missed you last time. You weren't here with us before, right?
I had another meeting that.
Okay.
Yeah, but I definitely am all about learning and making my business as successful as possible. So.
Not a problem. Well, we look forward to having a one-on-one, so we'll figure out how we can help you.
Thank you.
Okay. Anybody else new joining us?
Tony shared in the chat that his company is Triple Threat Security LLC. Where are you based, Tony? Feel free to
Hey, can
unmute.
you guys hear me now?
Oh,
Yes.
wonderful. Yeah, there you go.
Okay, all right. Yeah, based right there in DC, the office is on Martin Luther King Avenue. We just started in 2019, being incorporated. Wasn't really that active doing these small one-off events. Had gotten a movie theater, but right then pandemic hit, shut us down from that there.
Mhm.
So we back on the rise. Been blessed with a contract for the embassy. One of the
Okay.
embassy here in DC started in February. So I'm pretty much still considered startup. I
Okay.
consider myself a startup company because this February has really been, I'll say, well, we really have a income coming in. I'll put it that way.
Okay, got you. Well, you might want to review the Get Organized Session 1 because DC has some rules if you like started stop operations, and you might have to renew certain things. So just want to check that out.
Well, I didn't stop. I kept everything active.
You keep it okay, perfect,
Yeah,
perfect.
yeah. I made sure that because I've been in security 32 years. I mean, so it's just what I've been doing my whole life
Mhm.
myself. So as I kept my own personal license active, I just kept the business license active as well.
Okay, good, good. So just be mindful when you get your business credit report. Make sure you work with the like Dun and Bradstreet as it's recording your information about. I think you might be able to document that kind of rate, so it won't look odd on your as you grow your business. It won't look odd that the first few years were a little up and down. Yeah.
Okay.
Yeah. But that happens. That's part of it, so it's okay. All right, great to have you. Again, we have no shame. Please put your website and other information in the chat box so we can share with others. Okay.
Yeah, sure.
Yeah. So as I mentioned earlier, some of the templates I showed had some auto calculations of financial ratios. I put a more exhaustive list in the folder. You see the link there, but I also put the link in the chat box. I actually scanned a couple pages from one of my favorite accounting textbooks. Not that I love accounting, because I surely did not. I did not like my accounting or my finance classes, but that's another story. But I thought they just have a great way of identifying the key ratios. And just another thing to keep in mind that you can get access to a lot of textbooks and information from DC Library. So I have a membership card. It can save you a lot of money to get access to information, because being in business means you have to access a lot of information regularly. Okay, but we'll be sure to give you some additional resources as well. Now, your ratios are going to be strongly dictated by your industry. So we're back to the Get Organized session. You have to know your industry so that you're doing the right comparison of what's the fitting metric for your business. Also, there's some metrics vary by geography, and some vary by the size of the business. So here are some reference documents and publications that produce those financial ratios by industry. And I tried to put as the selection of the most widely used ones out there. I think the most highly respected is the one from the Risk Management Association. They do annual statement studies that have benchmark reports by industry. There's the Almanac of Business and Industrial Financial Ratios. The latest edition is 2017. BizMiner is an online subscription service that provides ratio. It's fairly expensive, but if you're going to be in business, accessing data is going to be a critical part. So you need to put that in the budget somewhere. For those of you who are going to do one-on-ones, I will have access to at least one or two of these books. So if we need to look some stuff up for you, I'll be happy to do that for you. This evaluation handbook, and of course Dun and Bradstreet, because they are one of the leading business credit bureaus. They produce their own publication. They have a database Again, most of these fairly expensive. I would check with the local library, particularly if they have the almanac available that you can check out. But I will have some resources for you when we meet one-on-one, so we can fine tune which metrics are most appropriate for you. Okay. Now, a couple other calculations I want to throw at you. Again, if you are a Shark Tank or the Profit fan, you probably have heard this and wondered, like, really, what does that mean? Why is that important? So your financial statements gives you, financial ratios and other financial calculations. The two calculations we're going to cover now more closely your marketing sales, but they give you just as much information in terms of trying to figure out what do you need to do to continue to grow the business. So number one is customer acquisition cost. You're trying to figure out how much does it cost to convert a potential lead into a customer. So now we need to reflect back on the building the customer base that we talked about in session 2. Those funnels we went through, the marketing sales funnel, and then the customer retention funnel to getting to the loyalty stage. All of those steps cost you money. So what you want to figure out is how much is it costing me to acquire a new customer? Because guess what? You might be generating a lot of sales, right? And let's say your cost of goods may be decent, but you're spending an exorbitant amount of money to convert them from a person of interest to an actual customer. And so that's a whole different level of decision making you can make about what do you need to change about your business. And some of the sales and marketing expenses may be the cost for advertising. So you might want to examine, where am I placing my ads? The production cost. Am I hiring a graphic designer every time to make the ad or to make a content? If you're an inventory heavy business, how much money am I spending to maintain my inventory, the upkeep of it, etc. You can see how that could be important for a food service business where your inventory will spoil regularly versus somebody that's able to keep inventory on the shelf for a longer period of time. What are the technology tools that I'm using that might be inflating my costs and making my customer acquisition costs higher than I need them to be? So again, this is a very good calculation to do, but you need to have your few years of financial data to make that happen and make the necessary changes after analyzing that data. The next calculation you want to make is the customer lifetime value. So the acquisition cost, you're trying to figure out, okay, how much does it take to make them a customer? Lifetime value, you're trying to figure out how much money will I make off of that customer through the lifetime that they will be the customer. Okay, so the total. Yes, I'm sorry, go ahead.
Sorry to cut you off. Mel is saying she's not able to see the screen. Okay. Is everyone else having that issue?
I can see it.
Okay.
I can back out and go in again, see what maybe that helps. So let's do that. All right, can everybody see it now? Customer lifetime value at the screen.
Yes, you're clear. Yes.
Okay. See, that's you know what? I'm not even gonna be mad at them. We're able to do this in the midst of a pandemic, so I'm gonna be okay. But you can see I have my own issues with technology. So it's the total amount of money the customer is expected to spend in your business on your products during their lifetime. The tricky thing about this, you need to know the average amount of time in terms of years that a customer is going to be with you based upon the type of business you have and the types of products and services you offer. So my good friend with the technology company for the aging and home, right? Did I get that right?
Yes.
Yeah, right. So you want to have a customer for a number of years, right? Because once you install the webcam and the other features to keep the home safe for that older person and their family, you might be thinking your relationship with that customer might be 5 years or so. Another type of business might be just for 1 year. the cell phone companies play a lot with this because they try to get you to stay with them forever because they do think about it in the number of years they want you to buy. So that's why they have the contracts, and so they can make sure they keep you locked in. So with the customer lifetime value, you're starting to look at how much you can spend to acquire a similar customer and still have profitable relationship. You're looking at what kinds of products and customers with the higher CLV. You want to look at what products have the highest level of profitability. You want to look at who are your most profitable types of clients. So when you have calculated CLV based upon your product types and based upon your customer segments, you start to determine where am I making the most money? Who is most profitable for me? So the income statement, everything's grouped together. When you start to break out that information and do this calculation, you start to say, okay, which is the customer that's most valuable? Which customer do I have the right customer product and profit fit? So not all customers are equal and not all products that you offer are equal. Sometimes we overlook the more profitable product because it's not what we really wanted to do. It's not the fancy. It doesn't make us feel good, because it's just, it's just that, because we all have an envision of how we wanted to, run the business when we started. But as you get into it, and you might be 3-5 years into it, and you realize, my customers really wanted X, and I'm trying to give them Y. So when you do this calculation, it allows you to really think through, do I have the right fit? Okay. Any questions there?
Actually, when I did my CAC, when I looked at the CAC for our business, that was actually how I found out that we needed to focus more on the aging in place solutions.
Perfect.
Because our CAC on that, our net margin was at 58.5%. Some of the more commercial, bigger projects, like I was so focused on the bigger projects, thinking that they were so much better because I was looking at how much money was coming in.
Right.
I wasn't knowing that until I sat down and did the CAC worksheet, was the fact that so much money was being spent and time was being spent to get those bigger projects in.
You're breaking up a little bit on it. You might want to get closer to the mic.
Because so much money was being spent on the advertising, getting those bigger projects in the door, and then the turnaround time to get the cash in the account was longer as well for those bigger projects. And so my CAC is so much better on the aging in place solutions, which aren't a big dollar thing. The average aging in place solution is only $1,000, whereas the other items on the commercial side that we do were a lot higher. Over there were like $6,000 to $8,000, and so I was focused on the $6,000 to $8,000 and advertising and marketing to try and get those in the door until I sat down and did the CAC and the LTV. And then I figured out that actually the aging in place solutions was overall a lot more profitable for us.
Right. And with that information, it doesn't mean that a company has to give up on a particular product or services. You might need to go back and rework how you are providing that product and services so you can get the cost down. So it is more fitting and it can generate more profit. So that's exactly the type of analysis you should be doing. And so if you've done it for one customer segment, now you can just use it again. You got to think about, okay, what's the potential, and we're going to go into this next, what's the potential business model for another customer segment that might be looking similar to the age in place, but they have the same needs for the kinds of products and services we offer. So you're right on track. So you just need to go a little deeper to uncover the other customer segments because they're out there. And again, and you'd be surprised, they might not what you would look at normally, but they are definitely out So great one. Thank you for providing that to us. Anybody else have a comment, question? Okay. So now that we've done some calculations, we looked at our financial statements and we've looked at them, over the last 3 to 5 years. We looked, see if we had a trend. Like Ella, we looked at and said, okay, we need to make some tweaks on our customer segments. And now let's look at the business model, because we do have existing products and services. We don't have to give up on them per se, but can we make any modifications to be more profitable in those areas? So I put in here a definition for a business model, because there's so many, like everything else we talked about. If you Google any of the items that I mentioned, there's 1,000 different definitions. I like the simplest ones, as long as they're true. So for Michael Lewis, for the offer of the new thing, said that all it really means is how you plan to make money. In a nutshell, that's exactly what the business model is. It's you sketch out just the key essential things that you're absolutely going to need, and how does that generate revenue. So I put some three major factors here to think about. So we already talked about the customer segment and value proposition in our last presentation. You got to do some key activities, and you got to have key resources and sometimes key partners. And then you got to look at, okay, what's the money that's coming in and what's the money that's going out, and looking at your cost and revenue. Luckily for us, there are over 100 different business models, right? It could be a lot to take in, but you do need to, no matter how old your business is, you do need to identify which business models you're actually using. And you might be using multiple for different customer segments, and you need to identify those. And so I just put a snapshot from What is a Business Model article of a listing that they had put together. And you could be using anywhere from a freemium model, which a lot of us use. So the basic services is free, but if you want more advanced services, you have to pay more. So that's the LinkedIn model. There is the subscription model, so that's like Netflix. There is the razor blades model that you probably, and you're probably thinking, why have I seen a lot of commercials about razor blades? Because it at one time it was not profitable. Now it is very, and because there's a razor blade model, so you offer a low price for one component, but the other component that you need. So there's the actual razor, and there's the actual blade, and so you charge more for the recurring cost of the blade. But you might just give you the razor for free. So that kind of thing. So I just included a list. You don't need to go through them all right now, because you really do need to sit down and get all your documents together to figure out where you fit. But I'm going to give you a tool to help you figure this out. So there's what you call a business model canvas. It's a one-page document that allows you to sketch out your business model, your current business model, and then it also allows you to think through what changes do you need to make in your business model, so that you are very, very clear, is this making me money? So I did an example. So if you look at City Soul Catering, and the trick about using this business model canvas, they don't tell you right away when you're looking at it. This is a free download. I'll be sure to provide you the link, but it's also a copy in the folder. You want to start on the right-hand side of the canvas. So you want to start with customer segments, and then you kind of move across and then downward, okay? Because normally when you look at a document, you want to start on the left side, but this one is different. So you start by saying, okay, who are the customer segments? So we talked about that in the building your customer base. And so City Soul, we had identified the working mothers. Because of the pandemic, this was a new segment. This is not who we normally serve. Then you kind of identify what's the customer relationship, and there's a variety of them. So for this particular business, this particular business model for this customer segment, it's self-service, because they're using the web-based platform to identify what products and service they need. So there's no assistance from the company per se to order the product. Some companies are very heavy-handed on customer service, and so it's very personalized. That's a different type of relationship. than something that someone that's more web-based and it's very hands-off. The value proposition is the quick, heat-served meal kits delivered restaurant style, fresh cooked daily. So our key activities are going to be the cooking, the logistics, because all of this has to be coordinated, and the packaging. Because remember, in order for it has to get there, so it has to be delivered, and it has to be quick to heat and serve. Right, so this is tied to the value proposition, the activities the company needs to perform to produce the value proposition. And so what are the partners? And so as a result of doing this exercise, we had independent chefs because we are restaurant style and quality. So perhaps you want to have consultation or some network of chefs to get new ideas, new menus, etc. And then because of the pandemic, we were hit hard. We decided that we'll do some donation of meals as a result of the pandemic. So that would be a potential partner. The resources needed to produce the value proposition. We need the commercial kitchen because that's where we do the cooking. We have an ordering platform and we need a delivery service. So this would be the Grubhub or the DoorDashers of the world, because they would have a unified platform on there. Somebody can select what they want, pay, whatever the case might be. So those are just an example of key resources that this company would need. So what would be the channels? The channels are, how do I communicate and engage with the customer throughout the entire pre and post purchase buying cycle? So remember, we talked about the funnel and we talked about the ideas of the touch points. So you would just write down in this box, what would be those channels? So direct channel would be something that we would control. So we have our own website, we have a social media account, we have our own email list for newsletters, etc. Our indirect channels would be the ordering platform, delivery app, because we don't have control of that, but we are accessing it to serve our customers. And so if I look at that, then I could say, okay, what are my costs? So I'll have costs associated with the key activities, key resources, key partners, of course, with the channel. So I identify them here. And then I can identify, okay, what's the revenue? How are people going to pay for this? And so at first you would think, okay, there's a pay per order. You order a meal kit, you pay for it, you get it, that's it. That's one revenue stream. But by looking at this business model canvas, you can see how, hey, maybe we can add a subscription model on top of this. So you can do order one by one, or you can have a bit of a recurring ordering system. So this is the beauty of the business model canvas, so that it gives you a slightly different view of looking at your financial data, because you have your value proposition in mind, how you're interacting with customers, and most importantly, you have your customer segment identified. The key to using this, you only do it for one customer segment. You do not group them all together, because when you group them all together, you do not identify all the types of models your business might be using. And when you lay them out differently, I know it seems like a lot, but it really isn't. Once you get the hang of it, you start to see, where is there overlap? Where is there gaps? Where am I not meeting the value proposition because maybe I'm not paying attention on a key resource? Maybe I don't have the right channels to communicate with the customer. And maybe I don't have enough revenue stream or the right type of revenue stream for that particular business model. Okay. Thoughts, questions? Okay, so I put a little test case here. We have, I'll give you about a minute to look at this. So this, if that was the business model, I put together a quick mock-up of a Facebook ad trying to represent the strategy, the value proposition. If you're looking at this, do you see anything that I'm missing besides a period after daily? Is there anything missing from this advertising mock-up that reflects our business model? I'll give you half a minute to take a look at it. Okay, folks, all of you CEOs, what are you thinking? Did we miss anything in this ad? Does it reflect our business model? Are we shortchanging our strategy and value proposition?
That looks like ingredients, but not actually a full meal kit or what a meal could look like.
Okay. Very good. Anybody else?
The items shown aren't the most appetizing. Like, I'm looking at olives and dried up corn.
Right. Okay. So not a full meal kit, and in the select whatever the items, edible items being shown are not, most appealing. Keep going. It's one other thing that I want to see if somebody could point out.
Well, this is Tony. I think that the logo being in the picture of the meal is just out of place for me.
Okay. That would be a little bit of a stylistic, but I agree with you. I see what you're saying. Anybody else?
Vaughn Lee said, missing the opportunity for reorders or ask for repeat business.
Yep, great one. One more.
Not sure if this is the one you're looking for either, but Michelle says it's not a representation of what you do. It should show family style meals in their containers.
Yeah. So that was like the earlier CEO said something similar. Yep. You all have great points. And you did that in like a minute with a business model in front of you that I sketched out really quickly. And you actually put I am very much about practical tips. You put the business model in front of you, you have your financial records, and then you put samples of your materials side by side, and you say, am I expressing to the public exactly what the company is representing? The other thing that's missing, it doesn't say anything about the charitable donation, which if I'm appealing to working mothers, particularly in the pandemic, that's going to tug at their hearts. So I got the wrong picture. I do have my brand represented because the logo is consistent, but as one of your chief executives noticed that the logo in the picture might not be the best match. The picture doesn't reflect the quality of food. I do have the value proposition highlighted, but I don't talk about reordering. I do have the call to action for the book now, but it doesn't highlight the other feature of being a subscription, and I don't highlight the charitable contribution. Is this helpful to help bring things home that you got to tie all these things together? Because I don't want you to see customers, finances, and stuff like that, and the value and the strategy all is different. Is this helpful? Yay, nay?
Yes.
Okay. Anybody else? For a bunch of CEOs, y'all look quiet, and I'm calling you CEOs on purpose. Because if you're gonna go to that next level, as we talk about the business life cycle, you gotta have to own it. So, but anyway, okay. So let's just wrap all of this up and talk about branding and user experience and how this ties in. Because the financials are the reflection of not only your production of your products and services in terms of internal capacity, but it's also a representative of what's the external that you're expressing to the public. And so similar to the ad we show, I want to just mention branding, meaning how you are being perceived by others, and meaning the business being perceived by others. The brand is mostly entirely a result of how your audience feels when they come across your business. So yes, a lot of people want to focus on their logo and that kind of thing. Coloring is important, but it all has to be very consistent with the strategy, the value proposition, in order for you to convey the message that your product and service are worth the money the customer is going to spend. Branding consists of a set of actions. So the brand is how, you know, the customer feels about you. It helps build relationship. Whereas branding is all the actions you take to build the brand. And a couple of key components I want you to be very aware of is the brand archetype and the brand voice. So the brand archetype is based upon psychology. Each brand archetype is a certain personality that resonates with an audience, and it's 12 types. And I'm going to give you show you what they look like. And the brand voice is all about how your messaging, your tone is delivering information about your products and services and who you are as a company. So here are 12 brand archetypes. This is from one of my favorite. He calls himself a brand design strategist. I don't know how to pronounce his name. I keep messing up every time I get his newsletter. It's Epoch Designs. I think that's how you pronounce it. I like his stuff. So if you want to sign up for his newsletter, he's very straightforward in breaking things down. Because I'm not a branding expert, but I appreciate the talent it takes to go into crafting your brand. But it's a critical part and point of your business, because you have to stand out. You have to gain that strategic position, and your brand is supposed to help you get there. The 12 archetypes are listed, and it goes anywhere from innocent to creator. And so based upon, and there's definitions of what each of these mean, this is how these names indicate how a brand makes you feel. So you have to consider, how does your business make customers feel? The predominant. You might overlap in several, because I went through this exercise and I overlap on more than one brand archetype, but I had to make a decision on one final one. So you need to go through this and say, am I projecting that right voice to connect with the customer so they end up buying the product? This is why this is so critical. So while I go on to the next slide, has anybody else do you know, since you've been in business, do you know your current brand archetype?
Yes.
I have one no. Anybody else?
Yes.
Okay, so what's your brand archetype?
So mine is the caregiver.
Okay.
And our logo is green and blue. Green is for energy savings, and the blue is for the caring, the hassle-free, kind of loving side of it.
Okay.
We did the world or the moon to kind of tie in with the fact that the name is AV Global,
Okay.
and also to tie in with the wolf. We chose the wolf because he's loyal. Like, I researched it across, like, you know, is there some negative stereotypes in other cultures around the wolf, around other animals, because I wanted like a strong animal, but I wanted one that didn't have a negative connotation in other cultures as well. Because eventually I do want to take our product global. So I wanted to be conscious and aware if there were negative stereotypes around the animals that we chose.
Yeah, that's important.
So that's why I went with the wolf, because there isn't a lot of negative stereotypes around that animal. Also, they're looked at as being family oriented and loyal, since they travel in packs and things like that. So that went into our logo design.
Interesting.
Thanks.
Yeah, a lot, but interesting. I see where you're going with it. Huh. I'm gonna have to check that out. Okay. Lots of thought. Anybody else? So let me ask you, as AV Technical and Walden, I'm going to go over just a couple minutes. Do you think your branding aids your sales, marketing, and customer retention funnel? Or is it not a factor? Miss Ella, are you still there?
Yes, I'm here.
Okay.
Sorry. So yes, I think it does play an impact because of the way our logo is designed and set up, and because of the service offerings, the niche service offerings that we provide,
Mhm.
so that it gives them that sense of security, that sense of hassle-free, that family-oriented feel.
Right.
We also do a lot of other customer retention items that other firms don't do, since
Mhm.
we're looking at things from underneath a woman's lens, so to speak, as a female business owner.
Right.
So there's that piece that goes into it. We do a lot more hand holding after the
And
design.
this is documented in your surveys that the branding has an impact.
No, I haven't had any customers say that the branding has an impact.
So we're
I
not,
have
so we're
had
not
them-
sure.
Yeah, I have had them say, you know, I really like your logo.
Mhm.
I think your logo really fits what you guys do.
Okay. Okay. Can you do me a favor? Can you put your website link in the chat if you haven't already, so everybody can check it out? Because I'm trying to recall it from memory when I first mentioned it. Great. So as your colleague CEO has illustrated, your branding needs to feed the funnel process, the customers moving through the funnel, and not detract. And so what you want to do, you want to have those customer surveys and those follow-up to see if the branding helping or is it hurting. The other element I'm just going to mention really quickly is the user experience. And so as you look at your funnel, and we talked about it briefly on the building customer base, but there are 7 key factors you might need to focus on, one or more of them, just to make sure your experience is on point. And so number 1 is useful. Is your product service usable, findable, credible, desirable, accessible, and valuable? Now, we talked a lot about being valuable in terms of the value proposition. We talked about useful, so it has to fulfill its purpose. You got to do what it says you got to do. But you might need to focus on the other. A big issue with small businesses is, are you findable? Do you have a website? Is your search engine optimization up to point? What are your advertising and marketing efforts? So you're getting in the front of the customer. And then, are you credible? A lot of that is stuff we talk about to get organized. Are you maximizing your business registration, your certifications, and other designations your business might have? Are you using that to indicate to folks that you know what you're doing? You have an expert level. You can provide the product and services in such a way that it feels like they can trust you to purchase the product. So in the following slides, you have definitions for either of these, but these are other areas you could look at to improve the experience so you can improve the profitability of the business. Okay? So I'm just going to click through, and this is just a recap or review. I put in here a couple of examples. We had questions last time about changing strategy. I put in a couple of examples of some recent big companies that had to do some strategic change. It is possible, it is doable, but if it's done when necessary. Sometimes you gotta dive deep into your current strategy for changing. But other times, if you see the data says you need to change, your financial record, your customer feedback says you have to do things differently, you have to make the change. You have to make that decision. So Angie's List is now just Angie. And you've probably seen the commercials recently. Petco has recently rebranded and changed position to not just a pet retailer. They're now a health and wellness company. They have a very entertaining, funny commercial about it. But they got some backlash on their current customers because they took the cat and dog out of the logo, and they actually had to bring it back. They had to make a Twitter announcement and say they weren't gone because people bought into the brand as dealing with they saw their pets in the logo because it's a cat and a dog. So it can be done. You can make these adjustments even early on in your company's life cycle. Okay. So just to highlight there, you got to manage yourself in addition. Always write down why you started the business, manage your personal finances, and you have to manage your health. Without your health, you do not have the stamina to maintain the energy level that you will need to make decisions and approach the work needed for the business. So that's the highlight for managing yourself. I included some areas for COVID implications, and just because of the sake of time, I'll wrap up there. There is a survey just to give us your feedback on tonight's presentation, but it's really asking if you want more information. What's going to happen is if you want more information or like follow-up templates or anything like that, tell me the idea and I will try to make that happen for you and we'll get it to you. So I'm gonna put that in the chat. So your feedback would be greatly appreciated on that. Sorry, I went over time. I owe you guys 7 minutes. And you know, now that we're getting all vaccinated, when I see you, I'll make sure you have your 7 minutes back. But I'm looking forward to seeing all of you one day this summer, something like that. Thank you for having me.
Well, thank you. This is very
Yeah,
helpful.
thank you for taking
Really
the time out.
I hope it was helpful. I'm able to hang on for if anybody has questions, but Alden, it's up to you.
Yeah, before you guys leave, thank you again for joining us. The recording will be made available tomorrow. It will be on our website by close of business. Our website is chctdc.org under our small business section. Additionally, we will be sending out a post-event survey. We would love to have your feedback on that. And we're also doing our own shameless plug. We will be hosting, Dr. Walker will be leading another session in June, late June, on women's startups. It's going to be a very informative session series, just the same, with some focus on minority and women's certifications that are available. Thank you guys again for joining. Enjoy your weekends, and we look forward to also doing one-on-one sessions with you all. So we will send out the Calendarly invite so that you are able to set up one-on-ones with Dr. Walker. And after that, you'll also be able to work with Ms. Monica Jones and myself to get your business to that level that you're looking forward to go to. All right. Again, thank you.
Thanks, everybody.
Thank you.
Thank you.
Have a great rest of the week. Good night.
Thank you.
All righty.
Hey, Balden. Oh, shoot. Wrong way.
Hey.
You still have 2 people in.
You still there, Mel?
Michelle.
Michelle. Mel, if you're still listening, again, just go ahead and shoot us an email at info@chctdc.org, and I'll be sure to forward you the email, the sessions and presentations, and then you'll also be able to access those on our website just the same. All right.